Hello, Paul Gerard from Price Accounting Services, back again. Today we're discussing tax deduction label D5, other work-related expenses. This is a big one. This is where most taxpayers claim most of those deductions that relate to them doing their job and earning their income. And it's so broad, I'm even going to refer to the ATO's own notes and website to ensure we don't miss some of the key features. Okay, we're going to start out by saying with work-related expenses, there are two key areas you need to always be mindful of. One is the need for substantiation. So we've got a separate video which addresses substantiation issues for taxpayers. And it's very important that all work-related expenses have a reasonable basis and are capable of being substantiated using the required evidence, i.e. a receipt. Now, you don't always get or can obtain a receipt, so you might in some cases be able to substitute a receipt for reasonable evidence, such as a diary or a record of pattern of use. So if you're, for example, you want to claim home office type costs, you may work so many hours a week or so many days per month, and we can calculate out the total number of hours, etc. And we'll talk more about that in a minute. So that's one of the key issues. The second one is making sure that you adjust all these expenses for any private or non-deductible proportion. This is the ATO shooting fish in a barrel, okay? You claim a deduction, for example, for your mobile phone, and you claim 100% because you use it mostly or almost always, and always for work-related purposes. And you lack the evidence of that. All the tax office need to do is find on your bill one example of you texting or phoning your girlfriend, boyfriend, whoever, home. It doesn't really matter. You're gone. They will disallow the full deduction, and then it would need to proceed to an objection and appeal to go further. You're asking to be disallowed, so be very cautious about that. Only ever claim the work-related portion of an expense and have a reasonable basis for determining that. So I'm going to run through examples of these work-related expenses that are common, and they include things like your union fees. Union fees are often, but not always, shown on a PAYG summary. They're deductible. You might have a membership of a trade or a professional organisation. Again, 100% deductible where it relates to your income. Overtime meal expenses. That's a really key one to get right. Overtime meal expenses, if you receive an award allowance, just because you receive a payment from, for example, ANZ Bank because you work past 6 p.m, it does not give you any right to claim a deduction unless you then expend that money directly on a meal. So keep those receipts and that documentary evidence. Truck drivers, very common for them to consider that they're capable of claiming similar sorts of overnight meal and travel expenses. Again, sleeping in the cab of your truck is not an overnight expense, okay? So if you just because your employer might, your contract might provide for an award entitlement for an overnight accommodation or an overnight allowance, it doesn't give you any grounds to deduct anything. Soldiers, the same. You know, a hard allowance for sleeping in the bush provides no basis for any further deduction because you don't incur any cost. Sometimes professionals and tradies and the like, people with qualifications will attend seminars and professional development. Self-education or here, wherever you choose to claim it, it's going to be deductible where it directly relates to your income projection. You might even have reference books, textbooks, subscription sort of services. If you're, for example, an accountant, you might have a subscription to CPA Australia. You might also acquire certain textbooks, the Master Tax Guide, which you use for your personal resources. Hard to find that as a private use because, let's face it, it's not that interesting. So again, receipts, deductions, deductible. Tools and equipment. One important proviso to tools and equipment is this 100% work-related use, or it must be apportioned. Okay, so you've got to adjust for the private portion. And if it costs more than $300 for tools and equipment, it then falls in the realm of a capital item. Capital items must be depreciated based on their effective life. And we've got a separate video that addresses deductions for depreciation. Have a look at that, that'll give you some guidance. If you do have those sorts of expenses, rather than just lumping them all together and say I spent $2,000 on tools, show us the figure for all the deductible items. One amount's fine, but then break down the depreciable, and we need to know the date it was acquired, the amount that was paid, and what it was. We can construct a depreciation schedule and use accelerated depreciation to try and maximize that deduction. But as an example, if you buy something on the 29th of June, you're not going to get a lot of depreciation this year. You'll get more next year and possibly even the year after that, etc. So watch for those things. And then there's also the work-related proportion of costs such as interest on borrowing to buy sort of equipment, repair costs for work-related things, phone calls and internet. Check out the ATO video. ATO video and guidance on how to apportion these costs. They've become technical in the last few years because more and more we find ourselves buying bundled services. Your Foxtel, your data, your mobile phone, your wife's mobile phone, everything's all on the one plan. So if you can extract the specific thing, for example, you might have a completely work-related use for an iPad and you're getting it through Telstra and you're paying $50 a month for that, and it covers the device and its use, and you only use it for work. It might be possible from that plan to ascertain that cost that is deductible. But in many cases these things aren't that straightforward, and you might need to say, right, I've got capped calls included, etc. How do I claim all those work-related call costs if my phone plan says it's 100% included? Well, you might need to look at your total usage of all text and all calls for a month and go back to even an itemised bill or an online billing for that month and drill down and say, well, it looks like about 25% work related. Okay, so that's the sort of detail that is required here. Home office expenses. Wow, this is one that people make a lot of mistakes on. Just because you do a bit of work from home doesn't always mean that you're going to get a deduction. Okay. You need to have a separately designated area where you do your work, and you might be using data, etc. Now, the tax office accept the basis of using an hourly rate, and so if we can ascertain the number of hours, we can then multiply the hourly rate and claim a deduction. That's fairly straightforward and covers lighting, electricity, all those types of issues. But sometimes we find, particularly taxpayers who are renting, where they say, oh, I keep a office dedicated for home use. Warning bells galore. If you're not running a business from home, you need to discuss that type of deduction with your tax advisor. It's not recommended to claim a proportion of your rent just because for convenience you work from home sometimes. But if you do have an established home-based office, for example, your employer allows you to work from home a couple of days a week, and you might be looking after kids at the same time, it may well be that you do have a valid deduction, but it's well worth checking because this is the scope for the area of being disallowed and then having to appeal or object, and we don't want to get into that area. So keep good records, substantiation, diary and other reasonable evidence, and if you need further guidance, that's our job. We're here to help. We're willing to take your call, take your email if you're one of our clients, and we look forward to speaking to you then, or seeing you through one of our other videos, or even talking on Property Chat at some future time. So until then, bye.